You're watching Gold Rush Reporter, your go-to source for deep insights on silver and precious metals. If you've ever wondered whether silver could truly reach $400 an ounce, this is the video for you. It might sound unbelievable, but the forces at play in the market right now are unlike anything we've seen before. Between unprecedented global demand, technological transformation, and mounting geopolitical chaos, silver is quietly positioning itself for a potential surge that could shock even seasoned investors. The first thing to understand is panic buying. Industries like tech are increasingly dependent on silver, and when supply chains show stress, even the hint of scarcity triggers massive orders. Picture this: a major manufacturer suddenly can't secure enough silver for its production needs, orders are delayed, logistics scramble, and the news leaks. Once industrial demand is amplified, retail investors often follow, creating a ripple effect that drives prices higher. This isn't speculation. It's a repeatable pattern that the market responds to. And silver's unique status as both a precious and industrial metal makes it exceptionally sensitive to these pressures. But industrial demand isn't the only story. Over the past year, silver has lagged behind gold, trading below expectations despite record highs for its counterpart. Some might see this as weakness, but in reality, it's a signal. Silver is undervalued. The gold-to-silver ratio has stretched far beyond historical norms, and history shows that such imbalances usually correct with sharp, sometimes dramatic, silver rallies. This creates the potential for explosive moves when the market finally realigns. Supply dynamics add another layer of tension. Most silver comes as a byproduct of other metals, meaning production can't be quickly ramped up, even if prices soar. At the same time, demand for silver in solar panels, electric vehicles, and cutting-edge electronics is skyrocketing. Physical inventories are tight, and industrial and investor competition is creating the conditions for a potential squeeze. What makes this moment even more unique is the intersection with artificial intelligence. AI is accelerating industrial innovation, increasing efficiency, and driving demand for silver in high-tech applications like robotics, sensors, and renewable energy systems. This is not a distant possibility. It's happening now, and the implications for silver's price are enormous. In this video, we'll break down the supply and demand dynamics, the historical context, and the transformative role of AI in silver's future. By the end, you'll see why experts are calling this one of the most overlooked opportunities in the market today. Whether you're a seasoned investor or just starting to explore precious metals, understanding these forces is critical. Stay tuned as we dive deep into the silver market, uncover hidden trends, and explore why $400 an ounce might not be as impossible as it seems. Now let's get into what's driving silver beyond just hype or speculation. Industrial demand is surging, and silver's role is nothing short of critical. Think about solar panels, electric vehicles, advanced electronics, industries that can't function without silver. Photovoltaics alone consumed over 200 million ounces in 2024, and that number keeps climbing. Unlike gold, which is largely held for investment and jewelry, silver has a dual purpose: industrial backbone and monetary asset. That duality gives it a unique edge when markets shift. Here's the twist: supply can't keep pace. Most silver is mined as a byproduct of other metals, like copper or zinc, so ramping up production quickly is nearly impossible. Add declining mine outputs and shrinking global inventories, and you have a classic supply crunch. That's exactly the type of pressure that primes a market for sudden, sharp price movements. The ETF and commercial bar markets add another layer. Investors can swap paper for physical silver, creating complex feedback loops between speculative and industrial demand. And when geopolitical tensions or trade tariffs loom, industrial buyers rush to secure supply ahead of potential costs. That scramble intensifies scarcity and can spark sudden upward spikes in silver prices. Historically, silver has shown a pattern. When economic uncertainty or industrial pressure intersects with supply constraints, it rallies hard. Over the past year, despite gold surging, silver underperformed, not because demand was weak, but because liquidity and institutional focus shifted temporarily. The market was recalibrating. That underperformance is now a setup, a quiet warning that silver may be primed for a dramatic breakout. Meanwhile, AI is quietly rewriting the rules. Automation, robotics, high-performance electronics all require silver in critical components like sensors and circuits. AI-driven production efficiency is boosting demand faster than traditional forecasts account for. Industries using AI to optimize solar energy, EV manufacturing, and industrial automation are consuming more silver, and as supply lags, the imbalance grows. Combine rising industrial demand, constrained supply, and AI-driven growth, and the market dynamics for silver are stacking up in an extraordinary way. This is not hype. It's a convergence of factors that historically have led to explosive moves in silver prices. Next, we'll explore the global and geopolitical dimensions, how chaos, shifting trade dynamics, and international monetary strategies are amplifying silver's role as both an industrial and monetary asset. Now let's talk about the global stage. Silver isn't just reacting to industrial demand, it's responding to chaos, geopolitical shifts, and changing trade dynamics. Nations in the global south, like China and Brazil, are pushing for currency diversification and faster adoption of renewable energy. These moves are reshaping trade flows, and silver sits squarely at the center of that transformation. Historically, silver thrives when uncertainty spikes. During the Great Recession and the pandemic, silver outperformed many assets because it's both industrial and monetary. Investors flock to it when trust in currencies wavers or supply chains tighten. That duality is crucial. While gold often takes the spotlight, silver acts as both a hedge and an essential commodity, sometimes outperforming gold when global disruption hits. AI enters the equation in a transformative way. Automation, robotics, and high-tech manufacturing all rely on silver for critical components. AI-driven production and predictive algorithms are identifying silver as an undervalued asset with massive upside potential. Supply chains increasingly integrate AI, which pushes industrial demand even higher. The result? Silver isn't just a metal. It's a cornerstone of the emerging AI-driven economy. Now consider investor behavior. Institutional investors are watching these trends closely, while retail investors remain skeptical or unaware. The gold-to-silver ratio is flashing warning signals, currently over 90-1, far above the historical average of 40-60. When history is any guide, such imbalances often correct violently, with silver surging to close the gap. Meanwhile, global supply struggles continue. Commercial silver markets, where 1,000-ounce bars trade for industrial and investment purposes, are tight. The retail market, including government-minted coins and smaller bars, is comparatively dormant, but industrial demand is relentless. Companies scrambling to secure supply ahead of tariffs or trade disruptions add further pressure. All of these forces, industrial demand, supply constraints, AI-driven adoption, geopolitical uncertainty, and investor positioning, create the perfect environment for a dramatic silver rally. This isn't speculation. It's the market signaling its next move. When these trends converge, price movements can be sudden and extreme. Looking back, silver's history tells us a lot about what could happen next. Its performance is cyclical. Periods of quiet consolidation are often followed by explosive moves when industrial demand and market stress collide. Take 2011, for example, when silver surged dramatically, closing the gap with gold during intense monetary easing, or the post-2008 financial crisis rally, when silver outpaced gold in percentage gains. Right now, the gold-to-silver ratio is flashing a warning signal, sitting over 90.1, far above its historical average of 40 to 60. History shows that whenever this ratio gets this out of whack, silver often rallies hard to restore balance. With gold already near record highs, the conditions are in place for silver to outperform once again. Looking forward to 2025, projections suggest that silver's dual role, as both an industrial and monetary metal, could align with two simultaneous trends: the ongoing gold bull market and surging demand for green technologies. Solar panel production, electric vehicles, and advanced electronics all require silver, and supply is constrained. Most silver is mined as a byproduct of other metals, meaning production can't ramp up quickly even if prices rise. Add declining global inventories to the mix, and a supply crunch becomes inevitable. Artificial intelligence accelerates this trend further. AI-driven robotics, automation, and manufacturing are increasing demand for silver components. Predictive algorithms and AI trading platforms are recognizing silver as undervalued, amplifying investor interest. The combination of industrial necessity and monetary demand creates a unique setup. Silver is scarce, strategically critical, and increasingly recognized by both institutions and technology-driven markets. Historically, silver responds violently to supply-demand shocks, especially when industrial need intersects with monetary hedging. Today, we see that same dynamic: constrained supply, record industrial demand, and growing geopolitical uncertainty. If silver begins to rally, algorithms and institutional flows could accelerate the move, creating rapid gains that dwarf typical market expectations. This is why some experts are projecting silver could reach unprecedented price levels, even $400 per ounce under the right conditions. A persistent supply deficit, exponential demand growth, and renewed investor attention could create a perfect storm. This isn't a pipe dream. The signals are aligning across industrial, financial, and geopolitical fronts. When you put all the pieces together, the picture becomes clear. Silver sits at the intersection of industrial demand, global instability, and technological transformation. Solar panels, electric vehicles, AI-driven automation, all of these trends are accelerating the need for silver, while supply struggles to keep pace. On top of that, historical patterns and the gold-to-silver ratio signal a potential repricing that could be dramatic. We're witnessing a market where industrial necessity, monetary demand, and geopolitical uncertainty collide. Silver is no longer just a commodity or a secondary investment. It's becoming a centerpiece for both industry and wealth preservation. As algorithms, institutions, and retail investors start responding, moves in the silver market could happen faster and more violently than most expect. $400 per ounce isn't fantasy when you consider these forces together. Supply deficits, exponential industrial demand, AI-driven market shifts, and renewed investor attention could align to produce an unprecedented surge. The window of opportunity is now, and those paying attention have the chance to position themselves ahead of what could be one of the most remarkable runs in precious metals history. If there's one takeaway, it's this: silver's story is bigger than just price. It's about understanding the forces shaping the modern economy, the strategic importance of critical metals, and the opportunities created when mainstream markets fail to see the bigger picture. Stay informed, stay vigilant, and don't underestimate the power of industrial metals in a world reshaped by technology and uncertainty. Thanks for watching Gold Rush Reporter. Make sure to subscribe and turn on notifications so you don't miss any updates on silver, gold, and the forces driving tomorrow's markets. Your next opportunity could be just around the corner. Stay sharp, and we'll keep you informed.